Hey, hi. How are you? So, yeah, I just wanted to share with you um, a couple of things, i.e., what are the bad narrative that's still out there, talking down the market. There could be, hedge funds or mutual funds putting up a shorts or buying puts to hedge the market. Um, of course, the first thing is pretty much all of us, many of the analysts believe that the valuation is has peaked. And pretty much if you look at the Dow Jones, those traditional business stocks like Walmart, Costco, and all that, or manufacturer of chips like Intel, their valuation has come down and has been pretty much realistic, and there seems to be very little upside on the potential upside as to better future earnings because of the slowing economy and all that, and slower consumer demand. So the future quarterly earnings um, may everyone may value a stock based on the earnings, as you see, and with higher interest rates affecting their operating costs as well. So you will see that the valuation has actually at its current level, it's pretty much that's it. As I mentioned before, most of them have a single digit growth like banks and all that. Then the second point is from August onwards, right? um, the It's said that basically you have to start the student loan forgiveness repayment will resume after August as part of the debt limit deal. So the Biden administration pause on federal loan repayment will end in late August. So meaning that students and the young people who just came out from work, they will have student loans to pay. All those um, moratorium on deferment, or it's not a waiver for sure. Of course, Biden wanted to waive some of it to get the economy going. So those young batch of people, of course, are a big consumer group, and with higher rental, higher monthly installment, higher car loans repayment, they will definitely consume less in the market. All the extras, they would probably have to revise and skip in the extra NFT, the extra clothes, or the extra bags. So that will also affect earnings of companies because they consume less. And as you know, student loan is a big deal in US. Um, so of course, then the next narrative is you're talking about China slowing down. They are maybe going to start to put in some stimulus to save, especially the property market. And of course, if China and US are two big players in the world, and if there are two big economies slowing down, definitely will affect the whole world as well in terms of levels of consumption. So, and there's still a lot of money being invested in the market. Pretty much most investors are going to treasury bonds and all that, yielding 4% interest, which are pretty safe. Not the Credit Suisse kind of 6% bond, but if you can buy US Treasury bond, the likelihood of them coming down is very little. So it looks like um, there's still not much money putting into the market at the moment. Um, but I did mention before a very contrarian view. If you look at different sectors, industrial, commodities, banking stocks, consumer discretionary stocks, or companies, or big tech, which may have reached their saturation point, and their future growth may be the lower end of double digit, or single digit. Of course, they had their peak, their S-curve peak during the COVID crisis, especially companies in the service sector, or where you see more people, um, Facebook numbers, interaction time, and all that increase. Likewise for Google, YouTube section, and more and more people went into YouTube. Streaming company also did really well. More and more people sign up. And of course, it came to a flat plateau, and it's reflected in the price increase as well. So the contrarian view is definitely looking at growth stocks. Of course, growth stock, the likelihood of them going bankrupt is there. And there are some companies like Lemonade, the online insurance company. They are going into issuing new shares to finance their operation, as well as expansion into other countries and all that, which is not good because it's a dilution of shares. And so if you are a shareholder of the company, definitely dilution is not something that you want to look into. But then there are a few really good SaaS company. SaaS company means company that provides software, or creating a software platform. Usually SaaS company have very high profit margin. Of course, they have high software engineer costs as well, particularly in the shares compensation schemes that they provide to all the uh, coders and software engineers. But some companies, they have actually reduced that as well, the amount of stock compensation schemes. And usually those companies, they raise funds from the public, so they are not pretty much affected by the high interest rates, bank loans and all that, unlike traditional companies. So and some may be going towards breaking even. I did mention before, a couple of stocks I felt really, really worth it would be Grab, or Holdings, now hovering at about 360, Palantir about 17 plus. It nearly touches 19 like 2 days ago and came back down. SoFi, yeah, maybe, and you may have some speculative ones that haven't actually come up with a product yet, like Innovix and all that, but has a potential. But of course, look, it's safer to find a medium cap, small cap stocks that already have a market where they have an actual product to sell. And then of course you got Robinhood, which has no zero debts and 70 billion of cash from all the people depositing money to trade crypto, calls, puts, stocks, and all that, and they can put that in the market, in the treasury bond market at 4%, all that. So it's good income with zero gearing and zero bank loans. So, but these are the bad narratives out there. Of course, they got the Taiwan war as well. So, yeah, if you have any other comments or things that you felt that the market is still heading towards a bearish kind of sentiment, do drop me a text, a comment below on what your thoughts are. So, thank you very much. Hope to see you soon.